welcome to the stage.
Thank you.
And yes, I think you might want to sit down for this one.
Oh, no.
Yeah. So a year ago, you were here with me on stage again. You were here with me 12 months ago, and actually 12 months before that as well.
Oh,
so I think we could rename this from live interview to the annual barbecue.
Okay, yeah,
maybe.
That's good.
Yeah, no, but it's a quite nice tradition. It's nice for us. We get an annual update for someone who really has an overview of the market, and that's a good thing. Bad thing for you, and perhaps, is that we record everything, so I can go back and actually check what did he promise last year.
I think I had a big disclaimer.
Yeah, but we took that out.
No, okay,
so
okay.
That doesn't apply anymore. No, but jokes aside, 12
Yeah.
months ago, you were here, and I did go back and review the video from last year, and you said that you thought that we had hit bottom then. With that in hindsight, what are your reflections on the year that has passed?
Oh, it has been a tough year, especially for the smaller companies. But it is, as we used to say, it's getting better out there. But it is coming from a very low level of activity, especially within the biotech sector. So it has been a tough year for many biotech companies. But on the other side, if you are in the right part of the biotech, if you are in the tailwind of Novo Nordic and all these companies, then you have had a pretty good journey. And we can see some of the biotech companies. I guess I was bragging last year as well as on Gubra being listed in Copenhagen, out of Copenhagen. And last year, when we talked about it, Gubra and the IPO, it was about 1.5 billion Danish kroner. Today it's almost 10 billion Danish kroner. So companies are doing good, and they are doing things with mouses. I heard a small biotech company talking about not doing it with mouses, but that is definitely a company who have gone far the last year. But that aside, it is a problem for smaller companies to get risk capital right now. And I felt pretty confident maybe 2 months ago that it will even more heating up, and with the election in the US behind us, I think it will become more stable. The volatility will go a little bit down. It is pretty low right now, but it could go lower and more stable. But then a lot of uncertainty went into the market, and if you look at all the major index in many countries, especially in Denmark, that is really driven by pharma. We see a flatliner this year. Stockholm is 30, still up, but let's see. Hopefully for a long time, but we can see Copenhagen is definitely flat, and that is a driver for biotech and pharma in general.
I was going to say, we'll get back to those things, but like a general question, why is the biotech sector, why has it been struck so hard, especially the small companies? Maybe it's a simple question, but...
No, it's never simple, but we have been in this business for many years, and every time that interest rates are going up and uncertainty in society in general heats up, most of the investors are looking for more safe areas when they're investing their money and their future, and they go to the large companies. So we have seen a lot of, it's not only biotech, but it's tech in general. They are struggling to get their next round of finance. But I will say, even though that it's difficult to look at the numbers on the stock exchange, we can see in the M&A transactions that we can see it's more buyers and sellers are finding each other on the M&A side, and that's pretty good for everybody, because then the expectation between buyer and sellers are more equal now, and then it's possible to make deals. But it has been a problem with especially Corona going on, and with the energy crisis, and with the inflation. If you look at the numbers of pretty big companies as well, you have been on a very bumpy road, and investors want to see a pattern in what is going on. And if you want to sell off a company now, or put it on the stock exchange. You will look. I'm in the jury of the most innovative company in Denmark, and if you look at all the numbers from the companies 3 years back, it looks amazing. You will see turnover going up, EBITDA going up, but then you look at 5 years, boom, they're not even close to what they did before, but it's going in the right direction, but it's not going fast enough.
Yeah, looking back at history, I mean, Sweden had an incredible, very high number of IPOs a few years ago, and now we kind of see the flip side of that coin. And definitely the IPO window here in the Nordics has been firmly shut for a while. If you want to be dramatic, could you say that the stock market as a source of financing for smaller biotech, is that dead for the foreseeable future?
It will be closed for some time right now. But if you have the right company, everything is possible. But of course, it will be difficult to go public with a small size company. I think next year we will see some bigger companies coming. Also because, that's also back to the corona and everything else, that many big companies couldn't be sold for many years. So they are grown even bigger. And if they have the numbers now, they're more than ready for an IPO. And it looks like the investors are ready to go into bigger IPOs next year. So we hope to see some bigger IPOs. But again, it has been the last 2 months, especially after Trump. You can see all the upside on the Nasdaq Biotech Index. It's gone now. It's a flatliner now, as Andreas talked about from DNB. It's a flatliner right now. It took 10% down last month. So we need to look very positive to see how it will impact Q1. But we see application coming in on all our exchanges right now. So it is building up.
Yeah, we'll get back to that, the future outlook. But I kind of want to dwell on the history a little bit. And you notice I poured some water for you, because now is when the tough questions come in. No, I mean, this downturn caused by many macro factors, and still so many companies that have been going public the recent years have trusted in the public market as a source of financing to grow and mature and be able to finance their clinical studies and so on. But is this just the name of the game? Now companies are actually disappearing from the stock market. Or is there anyone that should feel a little bit responsible?
I think we all are responsible. But it's back to the investors. They had different appetite on different time. And if the macro economy is going great, and we will just see the prices going up and up and up, and I can assure you that this is, of course, when we are looking back, we'll say they should never have been IPO'd. But I think there's a lot of VCs and private equity firms that will look back in 21 and say, okay, gosh, I would have hoped that I didn't buy this company, because the prices were the prices at that time. So even though that you went public, it seems like a struggle right now if you're a small company and you can't attract capital. But I guess I talk to a lot of companies that are within the VCs right now, and you also need to be on top of the VC agenda if you want to make it there, because maybe they have 10 to 15 different investments right now, and I'm not sure that they can do the follow-up investment that they should do in all 15 companies. And in that sector, we are pretty good at saying, okay, that's the name of the game. If you're a venture capitalist, not all will make it, and they can do a management buyout and do something else with the company. And it is the same it was intended to be the same on First North. It was intended to be a place where you can find a different kind of investors, but not all of the companies would do it. They would not make it. We know that, and that's why there's a big fat disclaimer on all information memorandums on First North, and saying this is very dangerous to look into. But a lot of investors didn't read that page. Simply not. And why is that? Because we were all thrilled about everything was going good. I just wanted to have a bite of the next IPO. I wanted to make a little bit of money, but now it's back. And trust me, even though we're sitting here and say, okay, that was crazy, we will be there again in 10 years.
So
We have seen it many times.
yeah, so everyone, of course, has their own responsibility, and you have to read the disclaimers always, as an investor, as a company going public. But what about the market saturation? And we heard in the VC panel earlier that there are too many companies competing for too little capital, basically, at least here in the Nordics. And should there have been higher bars for companies to enter the stock market, you think?
Yeah, I'm a liberal person. I think if you can find the investors, and if you have a company that have ambition to be public and want to go a different route than to have VCs. I know a lot of people who have been within a VC owned company, who will never do it again. I know people who wants to do it again. So I think that it's a free choice. And if we can help smaller companies to get bigger, we will always be there. If you look at the US versus Europe, and you can see financing through an exchange, we are way behind. So we need to learn about risk and investing in small companies. And I know it's hard to say, but we need to learn how it works. If you invest in a small companies, there's a higher risk. There were also a higher return at some point, but now it was difficult. But on the good side, if we look at our exchange and what we are doing with First North, it's if you take the market cap on First North, it's only 1% of our market. Even though it feels very big for us in the room here, and also for me because it's really my baby.
Or if you are a company listed.
Or if you are a company, but it is small money in the big sense. It is, but it's a financing opportunity just like everything else. It's also difficult to be in the bank. Try to get to the bank and get some money. And I would still say that many companies on First North, they have a better set-off to survive than many other companies. Because you can find new investors. Many companies that have A, B, and C rounds are difficult because you have some drag along, you have a lot of things, and then you stick too long on the high valuation. Because you have maybe had a C round, and they have some preferences, or they are allowed to say, okay, we can't make a new D round with a lower valuation when we did last time, and then they will say, okay, we're not going to do it. Even though it's best for the company, but it's not best for the people in the D round. On the stock exchange, you could change them all.
So one more.
But I'm also a little bit biased.
Just a little bit. One more tough question, and then we'll ease into looking into the future and all that nice stuff.
And you think that is easy?
No, but I'm curious what your personal view. I'm not expecting you to answer for Nasdaq as a company, but your personal view, the financing model where companies then, as it is, do share issues. They pay guarantors to secure their share issues. Guarantors, they can sell their shares at a discount. I mean, they buy it at a discount. And then who ends up with we call it Svarte Petter in Swedish.
Yeah.
Do you think this is a sustainable model?
It's a very Swedish model.
Says the Dane.
Yeah, but it is. It is a Swedish model. And it's not very sustainable. And this is not a Nasdaq opinion. But
put that in a big disclaimer.
But it is difficult to see the sense in this. And even though I've been in the capital market for more as my entire life, I can't see the logic behind these transactions. I can't see how current investors in the company wants to kill the market cap of the company. Simply don't understand why they want to do a discount round. The company is still struggling. It's a very low valuation right now, and then they want even 50% more discount. I simply don't understand how they want to pull the market cap lower and lower and lower.
I'm not sure that want is the right word here.
Yeah, but you can see it in many other countries. We don't see that in Copenhagen. Then we see the follow-on investments they are doing, maybe with a small discount of 5% or something to the current market cap. But it's all about having investors in your company, and you need that believe in you. So you need to build a investor culture and an investor base in your company with some investors that really believe in you. It doesn't have to be all, because you also need to have some liquidity in your shares. But if you don't have 2 or 3 investors that really is behind you, it is difficult as a public listed company, and you should work with that every time. And I'm a little bit surprised if you want to build a company, you are going in that hard in some of the companies. But that's my personal opinion.
The funny thing is that time is running out, and I haven't gotten to the easy questions yet. So
oh, what a shame.
There was actually a barbecue. No, but before we then are forced to shut down this conversation, future, if you look in the crystal ball, you were saying something about applications. So what does the IPO trend look like for the forthcoming 12 to 18 months?
I think it is heating up, as we say, and I was told to say it by Andreas, but but it is heating up, but it's coming from a very low level. But we have a good dialogue with many big companies. If it's big possible, companies. We don't know. We don't have that many conversations with smaller companies, but somebody has to start it, and it has to start from the top.
Yeah, it could be always a lot of psychology as well. If you see a few good things going on, then maybe.
Yeah, but we know every time if retail investors are looking at their share portfolio and they can see they are in a plus, they're more positive. If the plus is getting very high, as it did in 21, you're really experimental with your investments.
We're going to have to make that our final words. Thank you, Carsten, for taking the time and be brave enough to sit here again with me, and I'll see you in a year.
And thank you for doing this. It's really appreciated.